James Hardy, anyone who's been, myself included, by the way, who's been doing renovation during COVID or building a house for that matter, would know the pain and sting of the high price of building products and also the difficulty in getting them. What's the outlook now for companies like James Hardy then, and where do you see them in the cycle?
Yeah, no, good question. I mean, it's a look across the valley story, James Hardy. You know, most analysts have their earnings falling this year quite dramatically, somewhere around 10% or more, and the company did sort of have an earnings downgrade, you know, a couple of weeks ago. So, you know, Hardy's it was off to the races. You know, we were talking earlier about how strong the Aussie equity market was at the start of the year. I think Hardy's was up 30% at one stage, and it's given some of that back. So this is a look across the valley. This is saying that at some point in the next 12 months, we'll start to see a bottoming and a recovery in housing construction, particularly in the US market where Hardy's are very strong. But also here in Australia, as I said earlier, we've got 300 to 350,000 new immigrants coming to Australia in the next 12 months, and there's no housing supply. Vacancy rates of 1%. So we do think we will see a pickup in resi construction at some point, and the market's a forward-looking mechanism. So we're looking sort of 12 to 18 months out to that recovery, and we think the share prices will move well ahead of its earnings. So that's kind of the look across the valley story for us as James Hardy.
A look across the valley story. What's the story then for South32?
Yeah, look, it's really about, you know, obviously the China recovery story is it's probably going to be less metals intensive than previous, you know, growth stories in China, but we still want to have an exposure to raw materials and you know, aluminium in particular, but also manganese, nickel, and other commodities. We really don't like iron ore, so we're kind of looking for an exposure to base metals that's not too iron ore heavy. And South32 being spun out of BHP has no iron ore assets, so it's probably our favourite diversified miner. And we just think investors should have an exposure to raw commodities in their portfolio, just in case we have a reflationary pickup, so growth picks up a bit more and we get some more commodity price inflation. So South32 is our favourite exposure amongst those diversified miners.